Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December the 22nd, the last day before Christmas. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on with some economic data across the pond. We got final GDP quarter over quarter came in at 0.4% for Great Britain, expected to be 0.4%. And then that's about it over there. Over here, we've got our core durable goods orders came in at negative 0.1%, expected to be a positive 0.5%, but they did revise last month's number up from 0.4% to 0.5%. Sorry, 0.4% to 0.9%. So all in all, it's pretty close to being a wash. Now remember, durable goods orders includes automobiles, computers, anything basically that you are going to have for over 3 years. Now they strip that out because that can be more volatile, and the durable goods orders, what we purchase more often, has a tendency to give us a better indication as to the robustness of the overall economy. Factory orders, which will be released in about a week, will revise that number as well. So keep that in mind. Then we got core personal consumption expenditures price index came in line with expectations at 0.1%, expected to be 0.1%. Durable goods orders with those autos, airplanes, computers, appliances, things of that nature added back in, came in at 1.3%, expected to be 2.1%. So a bit of a wet blanket on that. They did revise last month's number up from negative 1.2% to negative 0.8%, but not quite making up for the drawdown on those durable goods orders. Now, some of that could be due in part to people going out and buying automobiles a little bit earlier than expected. Remember when we had those hurricanes, a lot of people went out there and had to buy some cars. So a lot of those people had already purchased a little bit earlier than maybe what was expected. So that number, not so great going into the holiday season though still. Either one of those for that matter. And then personal spending came in at 0.6%, expected to be 0.5%, but they did revise last month's number down from 0.3% to 0.2%. So, another wash there. Personal income, a little bit lower than expected at 0.3%, expected to be 0.4%. New home sales came in quite nicely at 733,000 units, expected to be 654,000 units, but again, we got a revision down from 685,000 units last month, and they revised it down to 624. So again, another pretty close to a scratch on that overall number. University of Michigan consumer sentiment came in at 95.9, expected to be 97.1, so lower than expected there. All right, having all that out of the way, let's get it on with the overall economic data. We've got crude oil slightly down. A lot of people probably, after yesterday's euphoria, everything being up, everything seems to be pretty much down today. As you can see with crude oil, it is in the 58 handle, but it is slightly down on the day. Gold futures, the gold bugs are loving it though. Up $7.80. A lot of this probably has to do with Bitcoin. Futures are getting decimated right now. We'll talk about that here in a second, but they were getting crushed earlier on today. This is something I wanted to mention. Long Island Iced Tea Corp. Look at this huge jump. Well, they had a nice little spike back here, but came down, was trading below $2 a share, which is pretty low. Now, they make iced tea. Well, yesterday, they announced that they were changing their name to Long Blockchain, which is basically the methodology in creating all of these cryptocurrencies, and there's a lot of other uses for it. But anybody changing their name, just changing their name to include blockchain, is blasting off. And as you can see, they almost traded up to $10 yesterday just on that announcement of the change of name. It's off a little bit today, but that name change is just crazy. And we're seeing that a lot in a lot of different stocks or even private companies and stuff like that are changing their name to include that so that they can get investors. This is a pretty interesting bump in the market here. I wonder if some of those CEOs and stuff went out there and started buying their own futures or buying their own stock, I should say. All right, this is Bitcoin off quite a bit. As you can see, it traded down to 11,300. What I want to mention here is look at this 1 week, almost $9,000 coming out of this particular cryptocurrency. That's a lot of money if these people started getting into this early. I mean, that's going to be a painful ride. That's what you get with this very volatile future and or cryptocurrency. You know, there's a lot of speculation with it that it could go to, 100,000, things of that nature. At the end of the day, it's just getting beaten to a pulp, really. If you got in early, you lost half of your investment. Anyway, on to the bonds. Bonds are down on the day as well, albeit slightly. Came down, has really found support right down here at around the 150. It wants to stay in that 150 handle. I think the continued interest rate increases, these numbers we're seeing right now aren't that great. And I expected to see a pause in December just to see how things went. They may have gone a little bit early if we're starting to see some of these economic data points not being so well, especially heading into a holiday season. Why crimp spending going into holiday season? Never understood that, but this Fed seems to not really care. Then on to the VIX. VIX is moving higher, trying to test that 10 handle or double digits, and that's because we're starting to see a little bit of kink in the equity armor, if you will. It is being supported by the 9-day moving average here, as it has for the past month or so, but it is down on the day by about 45, 46 ticks. Then we've got the NASDAQ also down on the day, by about 16 or 14, 15 ticks here. It's really quiet days. You can see volumes really starting to slack off as well. And then mirrored image with the E-mini S&Ps down on the day, but it's not anything to be super concerned about as far as I'm concerned. Heading into a holiday weekend, we're expecting to see volumes really start to come off. That's what we're seeing here. Maybe some profit taking, things of that nature, but just not a whole lot going on. I'm trying to get out of several different things that are just trading sideways, and I'm just banking on theta decay at this point. But one of those things, let's talk about the daily chart. This is the 30-minute candlesticks of the days of the E-mini S&Ps. Each one of these segments where you can see the little market profile is a daily segment. But, for all intents and purposes, it is really in a range for, lack of a better phrase here. We just really haven't gone anywhere all week. It's just been pretty quiet other than maybe on Monday and Tuesday kind of making that rally, but really settling down now. All right, so on to a few things that I'm looking to get out of right now is UPS. I am short the 125 calls. It's gotten my directional move to the downside, not really seeing volatility come out of this one, but it is giving me that theta decay that we look for when we had high implied volatility. I took advantage of that. It's come off a little bit, gotten the directional market move, but it's not quite at 50% of my max profit. It's looking like it's actually getting away from me a little bit, about a dime away at this point. And the other one that I'm looking to get out of is Verizon. Got these orders working right now. Verizon's gotten my directional move to the upside, sold some January 50 puts in there. They're trading around 20 cents right now. I'm trying to get out at around 16, 17 cents. I think I have a working order in at 17 cents. So I'd like to see this move a little bit higher, and I can probably get out today. Otherwise, I'm just going to hold on to them. And the other one that I'm looking at is PayPal, which has gotten my directional move. I sold some calls in there in the January, sold the 80 calls, if you remember, and pretty close to 50% of my max profit, trying to get out for about 25 cents right now. It's trading around 28 and change maybe. So got in the direction of move, looking to get out of that. Again, not really seeing the volatility come out of this one as much as I would like to see. And the other one that I've actually let squeeze out a little bit more, because I've got this both in my IRA and in my margin account. In my IRA, it is with the commissions, they jacked up my commissions. So to get out of this trade right now, it's going to be pretty close to a scratch, even though I'm getting out at 50% of my max profit. So I got to make that call, which seems to be like we have to make this call every year. You see them move your commissions or anything like that, or you've done a lot of trading, then call these guys up, because they don't want to lose AUM, which is the big buzzword in these type of sectors. It's assets under management. They want to tout that. It's a vanity metric. It's something that they can go out and say, hey, we're the big dog on the block. We have the most AUM, assets under management. And if you start threatening to pull those assets, it costs them a lot more to like lose that business than it would really to just lower your overall commission. So take advantage of that, especially if you've been trading a lot. I would suggest if you have commissions over, $5,000-$6,000 for the year, that you can probably call them up and at least get them to lower it a little bit. So take advantage of that. It's like calling up the cable company or the direct TV. Hey, I'm seeing a deal over here at cable. I might want to switch over. Rather than them having to lose your business, they will lower that price. So take advantage of that. Direct TV and stuff like that. It takes about 2 years before you can do it. But with the companies like this, you can do it about once a year. You don't want to be the one that calls them up and says, hey, you owe me this because I've given you so much money. You just say, hey, I'd like to look at this. I see some other deals out there. Do your homework and say, I'd like you to lower my overall commissions. I've been a good customer and things of that nature, and play it that way and play it the nice guy. You get more bees with honey than with vinegar, all right? So play that for what it's worth. I'm going to be making that phone call too as well. All right, that's about all I got for you guys today, other than today's webinar is going to be on the long put spread, all right? It's going to be a really good one. I'm going to show you how to set this strategy up to increase your probabilities of success. Also, I have certain rules that go in and around this long put spread. It's not just like something you would read online. Hey, buy a put, go, a couple ticks higher, sell that one, help finance it, yada, yada, yada. I'm going to show you how to set this strategy up to increase your probabilities of success so that you will have another arrow in your quiver in a way. So, if I'm just going to buy something out of the money, that's probably going to be just buying that put or buying that call. But I'm going to show you how to set up a put spread and help finance that put the right way. So check it out at protraderstrategies.com. And that's all I got for you. If you can't take that, take it easy.